Hey everybody, welcome to Gold Rush Live. Every week we go over macro markets and just get an understanding of where we are in the market. And most importantly, we cover gold here. So we're covering gold, the miners, which have been ripping all year long, up almost 50% on the year currently in some of the gold miners. Just talking about the ETF, some of the individual miners, Sam and I have picked out, those are all the way up over 100%. So some of these have moved like crazy. And that's what we do here at the Gold Rush. We're always picking out great mining stocks, but we also cover just about everything from uranium, copper, whatever. You guys will hear about it here.
We were talking about coal on Friday.
Yep, we're talking
Not a
about
lot of
coal and
analysts out there talking about coal.
soybeans another day and
Yeah.
biofuels another week. Like we cover it all here. And I think that's something that's important to understand is we're not just a gold only channel. We do cover just about everything in the commodity complex and any stocks that are related to the commodities. It could be all the way from AI energy plays and things like utilities, and that can be all the way to just old school oil stocks. We cover it all. So please check us out, go to the Gold Rush, and we'll talk to you guys about that after once we get done. And if you guys have questions, feel free to jump in, ask us some questions. I already saw Wavy said platinum versus palladium.
He
Um,
knows that it's about to be the Gatlin Gauntlet too.
yeah, yeah,
Wavy knows what's up, Jason.
yes. So love it. Please keep the comments coming. If everybody can hear me well, just let us know. Just put a dollar sign in there. Let everybody know what you guys can hear us well, and we'll get this started.
Cool. Let's start off with platinum. Wavy was asking us about the platinum. I really want to talk about the platinum. This is all I've been talking about recently internally with the All-Star Charts crew. And boy, does this get me excited in the mornings. Coming to my desk and seeing this platinum chart break out of a multi-decade consolidation. And Jason, it looks exactly like this consolidation that it broke out of in the early 2000s. I think it peaked in 1977, sometime around there, and it went absolutely nowhere for over 20 years. Once it resolved that consolidation, it rallied almost 500% in less than a decade. I think we're about to see a very similar situation with the platinum futures, and I really like looking at this monthly chart with the volatility indicator in the lower pane. I'm using the Bollinger Bandwidth, and as you can see, this Bollinger Bandwidth is near its lowest level ever, and that's exactly what you saw last time before the epic breakout of the consolidation. You saw historic volatility compression, and that's exactly what we've seen in recent years with the platinum. And I think all of that volatility compression is going to end up with a giant release of volatility, and I think it's going to happen to the upside.
Yeah, I mean, it's the simple way of looking at Bollinger Bands, and for you guys who have never read the book Bollinger on Bollinger Bands, I probably have told you guys about this like 50 times. Sorry if you're hearing it again for the
Told
millionth.
me at least 50 times.
I've told, yeah, but it's a great book, and it just really dissects like how to use Bollinger Bands and how they work. So if we're looking at this and going, okay, we're in this consolidation that Sam has highlighted here beautifully, and then we break out of that consolidation, hitting the top of the upper band, like that's a buy signal on Bollinger Bands. And like Sam said, tight volatility, just a rule of thumb that I always go with: high volatility leads to low volatility leads to high volatility. Think of the VIX all the way down in 2017. It's down to its lowest level in history. I think it got under $10 at one point in 2017. 2018 happens in January. We have the Volmageddon event, which basically makes the VIX just kind of shoot up to I think it was like $50 from $10 very quickly. It was within like a few days. Basically, Volmageddon was created by a ETF that was shorting the VIX the whole time, and it was making a ton of money, and too many people got caught on that side of the trade. And so next thing you know, vol expanded like crazy. So think about tight bands. That's something that's consolidation, and then a huge move. That's a volatility expansion. And so what Sam's looking at here is a volatility expansion. And even if you look at this through the 2000s, or sorry, go back to the 90s, you see that we're kind of in the same zone where volatility was dead. Everybody's going, well, platinum's never going to catch up to gold. There's nothing good about platinum. And then next thing you know, volatility expands. And usually the first volatility expansion is a great trade. You make a lot of money. However, it does come back a bit. And then that mean reversion, it just kind of trended up very nicely without a lot of volatility for a long time until the blow off top, which created that massive volatility expansion. I agree with Sam. I think we're going to get a breakout here. I think that breakout's going to probably lead to a volatility expansion. And there's a lot of reasons for that with the GDX miners moving, with GDXJ moving. A lot of silver miners are moving. It's telling you that there's risk on in the sector. And when there's risk on in the sector, people move to some of these other precious metals like platinum.
And platinum's also kind of considered an industrial metal. It's not just a precious metal. So I think this could speak to a coming breakout in copper futures, maybe aluminum, tin, zinc, all of those industrial metals. We also love to look at this intermarket ratio. We include this in our chart deck every single week of an equally weighted basket of precious metals relative to an equally weighted basket of industrial metals. So think of like gold and silver relative to copper and platinum, something like that. And that ratio has been in a massive downtrend for years. Precious metals have been outperforming, but it's at a huge level of interest. I think this was a key pivot point back around the Great Financial Crisis and back in 2016. So to see rotation into the industrial metals would not at all be surprising to us. In fact, that's kind of what we're betting on, Jason.
Yeah, I would think you're absolutely right there, Sam. I think that's what's going to happen at some point. It as traders, it's like follow the strength, follow the trends, but also think through what could happen next. Because what you don't want to do is start to sacrifice your winners for the losers. You don't want to start to go, okay, GDXJ, it's kind of high up here. I'm going to just go buy platinum because of it. You want to just have your position sizing to a point where you can buy GDX, you can buy GDXJ when that one moves, and then you could buy things like platinum. PPLT is the platinum ETF. If I'm saying, is that the right one? Pretty sure.
Yeah, we have Frey Lee in the chat here asking if PPLT is the best vehicle for platinum using ETFs. I
Yes.
think
So
that's
PPLT
definitely the
is
most liquid one out there.
yes. PPLT is PL is the platinum futures. They're still pretty large. They're about 50K per contract. But they're once again they're a good way to really play the metal the right way if you really want to be in the future space. But PPLT is a very good product. It trades very well with the metal. It's using spot platinum instead of platinum futures, so it's actually a pretty good product. So I do like PPLT.
For sure. And speaking of our favorite investment vehicles for expressing a bullish thesis on platinum, I love the Sibanye-Stillwater, Jason. That's ticker SBSW. And here we have an overlaid chart of that stock with an equally weighted basket of palladium and platinum. And that's exactly what Sibanye-Stillwater does. They're not really in the gold or silver mining business, but they're really focused on palladium and platinum in South Africa. And they have historically traded almost tick for tick. And right now, Sibanye-Stillwater is resolving this textbook bearish to bullish reversal pattern. But we have not seen the palladium and platinum confirm that move. So if the stock market has this right, I think we should continue to see an epic catch-up trade in palladium and platinum unwind over the foreseeable future.
It's just what's up next, and that's the thing that you have to
Yeah.
think about all the time, which is what's next. And it's not the think about it this way. So I've been pretty vocal about being against the big tech trade, basically going back to last year. But at the same time, I still held on to those positions. So I'm saying if you look at it and go, there's probably something next that's absolutely true. But make sure you're also still taking care of what's in front of you, which is gold is still a strong trend. The gold miners look great. But Sibanye Stillwater, that's a brand new trade, brand new 52-week high. And that's probably not going anywhere anytime soon. So I think that this is going to be kind of our best risk on gauge to see if money's going to flow into platinum and palladium going forward.
Totally. And there's some really interesting plays here with the SBSW and the options market. We've been discussing that with Gold Rush Premium members. We're not going to discuss that here, but I really think there's something there in the options. You can buy a lot of time with that and potentially get a multi-bagger in the SBSW. So I'm definitely interested in that. Another thing we've been talking about, Jason, is this continuation pattern in gold futures. You know, ever since we broke out to new all-time highs on March 4th of 2024, it's just been a steady grind higher. So we consolidated at the 161.8 extension for several weeks, then ripped higher to the 261.8 and consolidated there for several weeks. And then we ripped higher to the 423.6. And now we're in the midst of a multi-week consolidation in the gold futures. And I see some people on my Twitter calling this a historic top. I think it coincides with the measured move of the multi-decade base that gold just broke out of. I'm, I'm not really willing to call this a generational top in the gold futures. This just looks like another continuation pattern in the midst of in in my opinion, a secular uptrend that could last for many, many years. And I honestly think that gold's going somewhere around $8,000. I'm not saying that's going to happen this year or this quarter, but in my mind, that's where I truly believe gold futures are going. So for them to stop at just the third extension level of a massive base, I just don't buy that. I think I want to buy this resolution in gold futures if and when it happens above that 3,400 level.
I agree. And I think that one, it's when you're in an uptrend, everything in your body as a human, not a trader, as a human, is telling you that this is expensive. And you have to fight that. It's the hardest thing I really think I had to learn as a trader because I was the person who would have saw that top probably back at 2,300 and probably tried to short that and gone, okay, I'm going to short that because obviously that's gone too far. It's expensive. And then I'd go to the next one. And after getting stopped out or just, getting blasted by it, I'd be like, okay, I'm going to do the next one. And that's how I would have traded this starting out. As the years went on and I learned like trading, you really always want to trade with the trend. I would rather trade if you're a dip buyer, I'd rather you buying the dips on the way up. If you're a trend follower, I'd rather you buy the breakouts. You can buy them the breakouts above the Fibonacci's extensions. You could do a bunch of different things, but no matter what, shorting this will not make you a ton of money unless you're perfectly right. Like if you get it, if you nail it, great. And I know that's what everybody wants to do. There's probably somebody in the chat probably going like, I'm going to nail it. Like I'm right. Like I
Good
thought
luck.
so too. Yeah. But at the same time, would you rather look at it like Sam and I have been talking about this for a long time? I think, all the way, go back to the gold rush, the false breakdown signal in 2023 that happened. You're looking at that continuing basically to today. And then if you didn't buy that, you bought the breakout above 2,100 and that continued to today. So once again, it's would you rather be in the trend that's making money or would you rather try to short the other end of the trend? So this is why we buy breakouts. This is why we buy those false breakdown patterns because they make a lot of money. I'd
For
rather
sure.
make money than try to be smart. It looks good. Like trust me, you'll look great. You have so many more friends if you short the market and you get one right. You could write about that for the next 10 years. There's a lot of writers who do that. But if you're a person who wants to make money, you want to trade with the trend, and that's what we're here to do is help you protect your portfolio and make money.
For sure, Jason. And how I learned it is that if it's okay to fight trends, but you better have a damn good reason to fight that trend because trends tend to persist in financially traded assets across the board, whether it's currencies, stocks, bonds, commodities, cryptocurrencies, even trend. That's just a fact. So if you're fighting that trend, the odds are inherently against you. And I also noticed a comment from Mark. asking for comments on gold relative to the Dixie, and I'm not really sure what that means. I think he's hinting at weakness in the Dixie could potentially lead to strength in gold because as Americans, we're trading it priced in US dollars, so a weaker dollar is good for the price of gold here. But that really is not something I overthink a ton. I like to look at gold futures priced in currencies all over the world, whether that's Japanese yen, Great British pounds, euros, Swiss francs. I look at all of them. And we're seeing new all-time highs across the board. The entire world is paying higher prices for gold. And to me, that is much, much more important than analyzing gold just relative to the Dixie, because that is what you see in true bull markets. You see demand for gold in every single currency, and that's definitely the case right now.
And sometimes the dollar is moving, and this is something that's important to think about. Sometimes the dollar is moving up as gold is moving up.
Yeah.
This is why I like, Sam and I talk a lot about not overthinking correlations, and it's because like as a trader, if you traded a long time, you've seen it all. 2019 was a great example of I think it was May 2019. You got GDX and gold started to break out of these little, and they were band squeeze breakouts actually. This consolidation pattern that broke out higher. And then you started to have this situation where it was okay, well, the dollar's actually pretty strong at the same time. The dollar was in an uptrend, gold was in an uptrend. And as the years have gone on, like things that didn't happen before, like oil in an uptrend, the dollar in an uptrend, that started to happen. So once again, it's a continue to look around and find the right things. And also, like Sam said, and I really liked his point, which is make sure you have a great reason to fight a trend. Earlier this year, Sam and I got pretty bearish on the dollar, and it wasn't because of the trend. It was because of the positioning. So, you have to have something that you're looking at. I think there's a bunch of different, once again, I think strategy trading makes you a lot of money because if you're trading in multiple strategies, you'll always have a move in the market. If you're looking at, situations where the market's consolidating and you're a good spread trader, you can sell spreads, you can make money that way. You look at breakouts, you can make a lot of money on breakouts. You look at mean reversion style trading, you make a lot of money that way. But it all depends on what type of market environment you're in at that moment.
Yeah, I completely agree with all of that. And I also see a question about BVN, Buenaventura. So that is one of our favorite mining stocks out of Peru, and we've outlined that one for Gold Rush Premium members. So if you are part of that, you can see all the details on the website. And Jason, you brought along this chart of the 30-year yield, that's ticker TYX in the blue line, and then the US dollar index, it's DXY in the green line, and then the S&P 500, and that is the red line. So what are you seeing? What's the relationship between these three lines, and what should we take away from it?
So when you're looking at the top, we're looking at yields. So yields are bond prices, and as you've seen, or yields are the inverse of bond prices. So when you look at yields as they're moving up, we're looking at bonds moving lower. So bonds are selling off pretty heavily. So that's the first thing to take away. So bonds are selling off heavily. Then if you look at the dollar is selling off heavily. And then earlier this year, the S&P 500 sold off heavily. It's about flat on the year currently. We haven't had a good year in US stocks at the moment. And what happened and why I even looked at any of this was because I ended up coming across an article where somebody said in April, stocks were down, the dollar was down, and bonds were down, and that hasn't happened in the last 10 years. And then I looked back 20 years, and then I looked back 30 years, and I got back to 1982 and found the first time that that ever happened was then. So all the way back to 82. And that's the point where we started to see money flow into some of these international markets once again, which was so also let me put a little bit of color for people who haven't really looked at the market at that point. 1970s, we had the stagflation era. So basically you had gold, you had silver, you had oil, sugar, whatever commodity you could basically spin around, throw a dart, they all went up and by a ton. Put a bunch of pressure on the market. Market stayed flat for about 10 years, actually 15 years. So go back even to 60 to, I think it was 69 to 82. And then 82, we bottomed in the market finally, and then we started to move higher. And this at this point is the only time we've seen something like that. Now the market didn't just skyrocket; some of these international markets really outperformed. So because Japan, being the main one, had a massive outperformance, it was the Japanese bubble. You guys look at that; it's wild. I've written out that about that before.
Is that the
Um,
greatest bull market of all time, Jason?
I mean, it's wild. It's one of the wildest ones you'll ever see in your life in a whole stock market. Like you're not looking at just one stock, you're looking at the whole country, and it's just ripping for years. And it created the Japanese bubble. So, money started to flow into different areas, and then emerging markets started to follow, and so on. And so, the biggest thing that Sam and I keep talking about with everybody, which is the international move into international stocks sustainable? And this chart, basically, the way I've explained it, says yes, if we continue to kind of see this exodus from US assets. That doesn't mean I'm exactly bearish on the US right now by any means. I still think we could hit an all-time high in the market, but I do think that there's a lot more money to be made in the international stocks, and pick your spots very wisely. Don't just go, I got to go all in China or something. Figure out exactly where those moves are going to be, where you're going to find the best trends, and stick to those, and don't do anything else. But I do think that the international stock trade has a lot of legs. I think it looks great. I think the setup's beautiful. And I think it has all the ingredients to be a massive winner over the next couple of years.
Totally, yeah. I can't argue with that, Jason. Let's finish today's show with some uranium talk. A lot of people are interested in the uranium right now, Jason. So let's give them the scoop. So last Friday, the nuclear ETF, that's ticker NLR, had its best day since 2008. And that was on the heels of President of the United States, Donald Trump, signing some executive orders. I guess we want to get into the nuclear energy business here in the United States, which certainly has not been the case for the last several decades. We've been rather hostile towards the industry. But that seems to all be changing right now. We've seen some incredible moves in those stocks, whether it's Constellation Energy, whether it's GE Vernova, SMR, the small modular reactor stock. I mean, there's been some incredible moves there, but what we haven't really seen is a bid for uranium mining stocks. So Camco CCJ is I like to call it the ExxonMobil of the uranium mining industry. And they are by far the largest in that industry. I think they're only like $25 billion right now, though. So it's still a very, very small company when you consider ExxonMobil, the king of oil and gas, is worth $500 billion. So it seems like there's plenty of upside here in the CCJ. You brought along a rather short-term chart. This one only goes back to the beginning of 2020. I also think you can zoom out on this chart and go all the way back more than a decade and see that the price is just now trying to resolve a massive basing pattern that I think has lasted 15 years now at this point. So how I learned it in technical analysis kindergarten is the bigger the base, the higher in space. And there's not a lot of bases that are bigger than CCJ. So do you think this could enter a brand new secular uptrend? This one has moved a lot before. I think in the early 2000s, it rallied thousands of percent. So this one can move. It has proven itself in the past. Do you think we're about to see something similar to that over the coming years?
Well, I got to see, my uncle trade this market and make a bunch of money when I was a kid. So that's my bias has always kind of been there and very
He
interested
made
in.
a lot of money in the CCJ.
He made a lot of money in all of them. Oh man, it
That's
was
awesome.
crazy. Yeah. So like, but back then these were the stocks. They were hot. There was newsletters created around uranium miners and so on. Like they were hot. So anybody in the chat who's been around since back then, let me know. But like, if you saw that, it's wild. But definitely go back on these charts. Look at CCJ. Go back as far as you can. You can see the moves. You can see when Fukushima happened. I think that was 2012. You can see the fact that like that kind of changed everybody's look at the uranium market. But now, as we have more new technology, as the grid keeps getting under more and more pressure, we're kind of looking at this situation of going like, hey, we kind of need more nuclear in our life. And so,
And Jason, I also, on that note, I'd like to point out that like the largest, most important corporations in the entire world, companies like Microsoft, are backing this industry. And
yes,
Microsoft essentially has all the money in the world. I don't know how much the cash they have on their balance sheet, but I suspect it's in the hundreds of billions of dollars range. There's a
yes.
lot of industry tailwinds here in uranium.
And if you think about it, like we have a situation here that's kind of a perfect tailwind for this sector. Like it was unloved, it was hated for so many years, and it just got beaten to crap. And then recently, it's been in a massive uptrend. It's been one of the better performing sectors that a lot of people aren't looking at. So I think just we have all the ingredients here to get a nice breakout. This is CCJ. This is the safest, biggest uranium miner. For those of you who've traded some of these, like there's some of them that you won't really want to be in some of these names. They're just small, they're very volatile. If you really know the sector, like Sam really knows the sector. Other people, my buddy Kashop also really knows the sector. If there's people like that who really understand the sector really deeply, please go ahead, find the individual names in there. But if you don't know the sector that well, either use the ETFs or use CCJ, which is the biggest and best that we have in the States. So I think this is a good setup, just something for you guys to keep on your radar.
I really do like how the VanEck uranium and nuclear ETF is composed. You
Mhm.
have like 8.7% Constellation Energy, which is an absolute beast in this space. And Oklo, you have NuScale Power, that's SMR, and CCJ is about 7% of the ETF. So there's a lot of good components there. So if you're not the one to build your own basket with individual stocks, I would look at that NLR ETF. That's a really interesting one.
I always use the ETFs with uranium.
Yeah.
I always use the ETFs. My personal portfolio, I hold a couple, but mainly I use the ETFs. I think they're a much safer, better play. Because these things, like they have earnings, and one will go down like crazy, and one will
Yeah.
go up like crazy. Like it's very tough to trade those, but the ETF makes that the ride a little bit smoother.
And that's the worst thing you can do. Like if you get this thesis right about uranium and nuclear energy being in a secular uptrend, but you choose the wrong vehicle that gets blasted by 50% after earnings, that just would really suck. So I really am interested in that NLR.
Me too.
So that's all we have today. If you all are interested in what Jason and I talked about today, you should click the link in the description to take you to All Star Charts' Gold Rush page. There you will find our commodity trades, which include energy. We just covered coal on Friday. We have metals. We talk about precious metals every single Monday and outline our favorite mining trade. There's been some huge winners there this year with the GDX. I think GDX
To
is
say the
up.
least.
Yeah, GDX is up 50%, but we've had some winners that are much bigger than that. So it's been a lot of fun to cover this space this year, and I think you all will enjoy it too. And it's not just commodities that we write about, but we also have currency reports and bond reports. And you can also get access to Rangefinder, which is our special app that helps you find actionable trade ideas that we've outlined in the past. So yeah, what did I miss there, Jason?
Nothing. That was nailed it. Check
Cool.
us out. Come see us. We got a lot of stuff. Only thing you didn't say is that you said, yeah, we have, some winners. No, we have a lot of winners.
Yeah, that's
We,
true.
we have a
Yeah.
ridiculous amount of winners. So, all right, guys. Thank you guys so much for joining us again. This was great. We're on every week at 2:30 p.m. Gold Rush Live. We'll see you then.
Adios.